This is The Moneymakers. I'm Bruce Whitfield, and recently I was at the big Insurance Institute conference at Sun City. It's where more than 1,200 delegates of the insurance industry from across the African continent and from some other countries around the world gather to talk about issues that are pertinent to them. Amongst the speakers was Ismail, who's a Deputy Director General at the National Treasury. He focuses on tax, he focuses on compliance, and many of the delegates quite grumpy with the National Treasury over issues of regulation. We're going into an environment where there will be Twin Peaks regulation and where it is going to be a different regime. Ismail, Momoniat, an issue that I have with this regulatory framework is there's a lot of highfalutin, highbrow talk, industry talk, regulatory talk. Do consumers of insurance products firstly know that there is all of this stuff going on? Secondly, do they even care? They just want insurance to be affordable and pay out when it goes pear-shaped.
No, look, I think that customers actually don't know what's happening behind the scenes. The problem is when there's a problem, then they do know, and then they want to complain and so on. And I think if you look at the financial sector, it's quite different from selling a vacuum cleaner, for example. And for that reason, it's regulated differently throughout the world. It's a service, and it's reliant on trust, and if trust is broken, it sort of falls apart. In a sense, if you look at what happened in 2008 with the global financial crisis, I mean, that caused enormous damage in the world.
That was a banking crisis, however.
Yes.
We're looking to regulate the insurance industry, which suggests to me anyway, that regulators around the world don't trust bankers, so they throw insurers into that particular parcel as well. Or is insurance regulations just simply long overdue anyway?
Remember, you had AIG, which was an insurance company that was also almost went down. So what happened is, yes, the world started looking at banks, and it then spread to insurance companies. And it's a kind of concept now of what's called SIFIs, systemically important financial institutions. And in fact, there's a very active debate about whether some of the big asset managers should also be included. So I think that it's just a realization that some companies may seem to be even not very big sometimes, but the interconnectedness is such that if one small element fails, the entire system could come crashing down.
And people say, well, this regulatory thing, it doesn't matter to me because I'm simply a depositor, or I've got short-term insurance on my car or my house or whatever the case might be. But African Bank taught us the importance of regulation. African Bank taught us how when regulation either doesn't work or people flout regulation, whatever the situation is, it can go horribly wrong. And pensioners suffered as a result of African Bank through bond exposures that asset managers had taken. So here's a situation where suddenly regulation matters, and it only matters when things go wrong.
No, absolutely. I mean, even for us who are there in a regulatory space, just experiencing African Bank, you realize just how scary it is. And you don't know at any stage just how much trust has eroded, because remember, for a bank, as soon as there's a bank run, that's when things begin to fall apart. Now with African Bank, they didn't even have many retail depositors, but like you say, they had bonds that were issued, and you had a possible run on money market funds, which I must say I think the FSB the regulator there dealt with it very well by creating what he called side pockets. But you have to be able to always ensure in the financial sector that confidence is maintained, and that's in a sense what you're dealing with, what's called prudential regulation mainly, okay? But even just the way they conduct business is very important in the financial sector, because that too could become a trigger for a bigger crisis.
There's quite a big trust deficit between banks and their customers. Occasionally one sees insurance horror stories, and most people buy insurance as a grudge purchase. We're talking about short-term insurance here, whether it be house cover or car cover. They object to the huge premiums that they have to pay. They're not always guaranteed the payments because people believe, rightly or wrongly, that there's always a get-out clause for the insurance company. So there's that trust deficit. There also does seem to be quite a big trust deficit between certainly the industry and National Treasury. There's a lot of criticism from the insurance industry of National Treasury and of the regulatory framework. Do you feel as mistrustful of the insurance industry as they seem to be of you?
Well, I'm not so sure they're mistrustful, but I guess you know, in the banking sector, people have understood just what a crisis means and why you need regulation. And people feel it keenly because in the banking sector, because banks tend to be more connected globally. And very soon, if you're not doing what the other major economies are doing, your bank is going to feel like it's in a cold place.
Now, banks are one thing because
Yes.
that's Basel,
When it
those are the
comes to-
Basel regulations.
yes.
Insurance is different.
When it comes to insurance, and those are the issues, again, it's an issue of trust. So like you say, you got to check in a company that their claims policy is not one designed to just say no. And I think we heard one of the speakers as well. I mean, just pointing out the measures they have to take, not to start resorting to lawyers who look for loopholes about why they shouldn't pay. So I think ensuring that your claims policy is not biased against people who are claiming is very important for the insurance industry. Secondly, I think that to the extent that there are regulations that are required, I think that in the insurance industry, like you may have abuse on claims, you can have various abuses which people sort of feel. For example, there's many insurance protections that are, or policies that are sold where the claims ratio is very low. Now that's by design, or really that people don't need it, okay? And for example, we've done a study, and if you look at this legal insurance, the claims ratio is extremely low. So people are sort of scared into buying. It is a grudge purchase.
How concerned are you by the recent revelations impacting Lewis, for example, and the sale of life products and the way in which those deals, and I think it was a big screen TV that you could have bought it for less than 8,000 Rand at a competitor, was sold by Lewis for nearly 10,000 Rand. The end price after term, close to 26,000 Rand, courtesy not only of interest charges, but all
Yes.
kinds of levies and fees and charges and bills and insurance products. I mean, this feels African bankish in a way.
Yes, I think these policies are disgraceful, and it's what tends to happen, that people go and buy furniture and then they get sold all kinds of other policies which they buy in the heat of the moment. In fact, we are...
They're not buying them heat in the moment. The retailer insists that they take them.
Well, I mean, the retailer sort of forces it on them in some way. And what we're trying to do now is to delink these transactions. We've in fact put out a paper, because if you look at, for example, in many economies, in some cases they even ban these extra purchases. On the other hand, if you just did a back of envelope assessment, like you say, the kind of charges are enormously high, and it's one of the big challenges that we have to deal with. And as you pointed out, that this has been going on such a massive scale that it's brought down. For example,
isn't this a failure though of regulation? Because you've got a private sector which in some cases is operating in an unfettered kind of way, indiscriminately. It took a private sector investigation to raise this into the public domain, to shame Lewis, which has seen the share price fall 20% since the revelations, and it gives the industry a bad name. And I'm sure it's not only Lewis, there must be others as well. The example we know about is Lewis. Now, the National Credit Regulator surely could have been a little bit more cognizant of what is going on. The reports and the suspicions have been around for years.
Yes, look, I think, when we look at Twin Peaks, I mean, what we're saying is that even our regulatory system is very fragmented. And the moment it's fragmented, you find that those who sort of have dubious practices know how to negotiate and find the gaps. And what you find is that even with regulation, you kind of need to move away from just looking at issues legalistically. You got to kind of try and get behind what's really happening. You need to look at it from the customer perspective. You need to act as soon as you see that there's a problem, okay? And often action doesn't mean that you have to go and be punitive, but you can sort of issue yellow cards. You can warn people not to go ahead with certain practices before you really act. And I think that regulators are expected to be almost play, the role of being all-knowing, where role of
Well, what is if the role of the regulators to not be the policeman, the police person, the police officer of an industry, what is the role of the regulator?
The approach we want today is that, yes, these are sort of issues that a good regulator should be aware of. So the first issue is if it's a unknown for a regulator, that clearly tells you that the regulator is not competent. For that reason, we want regulators to look at preventative mechanisms. Even if you don't know exactly, let it at least be a known unknown. Or
do you sometimes find that your hands are quite tied by the legal system? I mean, we look at the garnishee orders thing, which Wendy Applebaum, who will be speaking to you later on in the week, that she took up very aggressively with the law clinic at Stellenbosch, and won absolutely pivotal cases when it comes to the abuses of garnishee orders. Again, here's a private sector individual taking action, feeling the abuse. The regulators are behind the curve there as well.
Well, I think our current system, the system of regulation is behind the curve. And that's one of the big reasons why we want to develop this Twin Peaks system.
Will that make the difference?
Well, look, a system by itself won't just improve, okay? You've got to have good people behind it. And in fact, what we're doing is that we're getting two dedicated regulators for two different objectives. What you tend to have is normally you'd focus on the prudential, and we find that those who focus on prudential objectives tend to over-focus on it. What we need is someone looking at it from a market conduct or customer perspective. And in a way, we think that you need a separate institution. They need to work together, the two regulators, but you want to just focus and look at this from a customer perspective.
We saw the pitbull approach of Vuyani Ngolwana, for example, when he took on the life insurance industry. Are you looking for the regulators within this new Twin Peaks framework to be that kind of quite aggressive, quite business hostile, where it's justified, individuals?
Well, I don't think business hostile, but I think someone who's quite firm with the industry and really, blows a whistle and takes action when action needs to be taken. I mean, you've seen this now in the UK, where they've also gone for a Twin Peaks model, where you got the Financial Conduct Authority, and Martin Wheatley there, who I'm sad to see is not going to stay longer. He's been very firm. He's issued the biggest host of fines against the industry. I think he's really been sort of cleaning the industry up. And as I think what we've been saying, one needs to really change the entire culture in this place. I mean, take an insurance company. Your claims ratio can't be left to the lawyers or lawyers in the claims department. It's something that top management has to look at. They need to check that the system is not biased and just rejecting claims, that their system is fair, that the customers actually feel that they're getting value for money.
When is this new regulatory regime then in force? I know it's early day. People have been talking about Twin Peaks for 5 years. By 2017, 2018, do we have a new regulatory regime that is more consumer friendly?
Yes, look, I'm hoping that we could begin sometime next year because we intend to table the legislation next month in Parliament. And once it's tabled by the Minister, hopefully the parliamentary process won't take too long. And by early next year, the law will be in place. We'll then still have to get down to the harder job of establishing those authorities, getting the right people in those authorities, and then developing the right culture even within your regulators.
Ismail, Momoniat, thank you very much for taking time out of the insurance conference at Sun City. I'm Bruce Whitfield. This has been The Money Makers, or in this case, some people may seem as a money breaker, but Ismail Momoniat looking to tighten up regulation in the financial services industry to curb abuses, but at the same time create an industry that becomes more sustainable. Wouldn't it be nice if you actually trusted your insurer? That's it from The Money Makers for this evening. More Money Makers tomorrow. Till then, bye-bye.